This is The Rick Edelman Show.
Let us shift now to a conversation about Archegos Capital Management. You have probably seen this in the news and wondering what on earth has happened. Bill Huang was the operator of this hedge fund, $10 billion in size, that quickly grew to $100 billion. He opened accounts at Nomura, which is Japan's biggest investment bank, as well as Credit Suisse. He was making big bets on Viacom CBS and Discovery, among others. He bought the stocks on margin using swaps and other complex derivative products. Basically, what Nomura and Credit Suisse were doing was letting him buy these stocks with borrowed money. This was a big bet that the stocks would rise in value, but that's not what happened. The stocks fell in value about 2 weeks ago, and when that happened, Nomura and Credit Suisse issued margin calls. Basically, if the value of the asset drops below a certain amount, you have to cough up the cash to make up the difference. Well, to raise the cash, Archegos Capital Management went to other brokerage accounts it had. It had accounts at Goldman Sachs and Morgan Stanley, and it had them sell his securities there so he could transfer the money to Nomura and Credit Suisse to fulfill the margin calls. But it wasn't enough money. And so, even though he did all that, even though the accounts got liquidated at Goldman Sachs and Morgan Stanley, which further caused the value of those stocks to go down, the money was transferred to Nomura and Credit Suisse, but it wasn't enough. So they liquidated the accounts by selling those stocks out entirely, causing the stocks to fall even further in value. And still, not enough money to pay all the debt. The result? Nomura and Credit Suisse didn't get back all the money they had lent, so they have suffered large losses as well. Nomura says they've lost over $2 billion. Credit Suisse is expected to have lost over $4 billion. Nomura says, in fact, its 2021 profits are completely wiped out. And Credit Suisse says that it's got a highly significant and material impact on its profits. They haven't said exactly how much. The stock of both of those companies has gone down. Nomura stock is down 16%. Credit Suisse is down 14%. And $100 billion, which is what Archegos was worth a week ago, that company is now worthless. This is the biggest hedge fund failure since long-term capital management in 1998. Well, as you can imagine, everybody got summoned to the principal's office, the SEC, regulators in the United Kingdom, FINRA. They are all demanding that these banks explain what was going on. Why did they allow Archegos to buy tens of billions of dollars worth of stock with borrowed money they didn't have? And why did they do this with a guy who in 2012 paid a $44 million fine for illegal trading charges, a guy who in 2014 was banned from trading in Hong Kong? Why would they be doing business with somebody like this? And therefore, was this kind of outcome anything other than highly predictable? Was this a scam? Did these banks get duped? Well, time will tell. Fortunately, it hasn't had an impact on the broader financial markets, at least not yet. This does seem to be a limited issue. Let's talk about another scam at the moment, incurred by financial advisor Chris Burns. He's a fugitive, been missing since September. The FBI says he's alive and in the country, and they are looking for him. Burns fled the day before he was supposed to give documents to the SEC related to his business. He's accused of defrauding clients of millions of dollars through a Ponzi scheme, and he divorced his wife the day before he fled, and he transferred assets to her, including their home. She's now a defendant. She claims she didn't know the papers he asked her to sign were divorce papers or that he was about to flee, and she says that he should turn himself in. He was just profiled on America's Most Wanted. He's got a large tattoo on his left forearm, 3 interlaced black triangles. If you have knowledge of Chris Burns' whereabouts, you should contact the FBI. And then there's the case of Eric Warren. He wanted a BMW, so he went to a dealer and he bought the car, put down $10,000 financing the rest, and while they were doing the paperwork, they let him drive the car. He drove it to a local bank, handed the teller a note demanding $10,000 or he'd kill her. She gave him the money, he drove back to the dealer, and he was promptly arrested. And he was sentenced last week to 20 years in prison for bank robbery. 888-PLAN-RICK, rickedelman.com.
These callers are pre-recorded and pre-screened. An index is a portfolio of specific securities. Common examples are the S&P, DJIA, NASDAQ, the performance of which is often used as a benchmark in judging the relative performance of certain asset classes. Indexes are unmanaged portfolios and investors cannot invest directly in an index. Past performance does not guarantee future results. Neither Edelman Financial Engines, a division of Financial Engines Advisors LLC, nor its affiliates offer tax or legal advice. Interested parties are strongly encouraged to seek advice from qualified tax and or legal experts regarding the best options for your particular circumstances. Investing strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. All investments have inherent risks, including loss of principal. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. Past performance does not guarantee future results.